Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Iyer and with me today is Mangalam Malu. Good afternoon, Mangalam. It's a very volatile trading session. Nifty once again has slipped into negative territory, and it's the mid-cap IT and even some of the large-cap IT stocks that are seeing quite a bit of selling pressure emerge.
They are seeing some selling pressure because they were, big supporters in yesterday's trading session. The Nifty banks doing well. But yesterday when we were talking about, the mid-caps, they were severely beaten down. We had seen an underperformance from the mid-cap index. Today it looks like the mid-cap index has done well to start mid-cap radar, up around 1.2% with 2,000 stocks in the green. So what we do is talk about all the top stories that we're tracking this afternoon for you. The market shrugged off concerns over US President Donald Trump's announcements that he will impose 25% tariffs on pharma and auto. Mid-caps shine. Auto, IT and pharma come under a wee bit of pressure, but realty and PSU banks surge.
Defense and railway stocks on the up move. RVNL surges after receiving a 554 crore rupee order from Rail Infrastructure Development. Defense stocks like Mazgaon Dock and Cochin Shipyard surge over 7% each.
Nava surges after its boards approved a buyback of up to 360 crore rupees. The stock up nearly 9%.
Blue Jet Healthcare and Suvain Pharma surge at the back of Macquarie's nerd. Brokerage firm says India's contract research, development and manufacturing sector is benefiting from secular growth as well as regulatory tailwinds.
US President Donald Trump's comments on a possible 25% tariff on pharma imports and concerns over the ability to clear US FDA inspections hits pharma stock. However, the Nifty pharma stock, which is the worst performing index today, stocks like Aurobindo Pharma, Zydus Life correct over 2%. These stocks have come off the lows. So we're talking about mid-caps doing well this afternoon, right? Just take a look at, names like Hindware Home up around 14%, Aegis Logistics up around 11%, RVNL after a small order win, the stock has seen a big up move as well. These are stocks which have nearly halved from their highs. So, we are seeing some traction out there. Swiggy is the other one as well. After today's move, the stock has gone back above the IPO price of 360 rupees. Remember, it's been struggling down around 40% from the highs, but now seeing some traction as mid-caps continue to do well. But let's talk about some of the buzzing names, mid-cap movers, our favorite segment on Mid-Cap Radar. And Vamakshi is by the wall telling us what are the mid-caps that are moving around in trade. Vamakshi.
Well, Mangalam, it's a nice day for the mid-caps, right? This index overall is up nearly 1%. And let's pull up the list of the stocks that are gaining momentum in trade today. That includes Tata Investment. That stock is up nearly 14% today. Minda Corp is another counter that is above 10% higher. Aegis Logistics trading near the day's highest point, up nearly 11.5%. And GRSE, that is Garden Reach Shipbuilders, is also seeing a very strong up move today. Railway stocks are also abuzz. Of course, there's an order win for RVNL. That stock is seeing an uptick of 11%. Ircon, IRFC, Texmaco Rail are all up anywhere between 4 to 6%. Defense stocks are the other, pack of companies that are abuzz today. Mazgaon Dock is up nearly 8.6%. Cochin Shipyard, Bharat Dynamics as well as Data Patterns are just some other counters that are abuzz today. Apart from that, on the flip side, let's also look at the stocks that are declining in an otherwise strong market for the mid-caps. That includes Credit Access Grameen. That stock is at the day's lowest point, down nearly 5.7%. PTC Industries trades lower, down nearly 5%. Archean Chemical as well as Godavari Power continue to decline in trade today. Let's also look at the stocks that are moving on the back of very strong volumes. This list includes Gillette. That stock is up nearly 5%. APL Apollo, BSC is also started at the day's lowest point, is now trading at the day's highest point, up nearly 7.5%. And Radhiko Khaitan is another name that is abuzz in trade.
Thank you so much, Vamakshi, for joining us and giving us a sense of what's exactly moving as far as the broader end of the markets are concerned. Let's now slip into a short break. We will be joined by the management of Garware Technical Fiber on the other side to discuss their Q3 earnings. Welcome back to Midcap Radar. Well, Garware Technical Fiber is the first management on our radar. The company's Q3 revenues grew 21%, while margin remained flat at 18.5%. To discuss this and more, we are now joined by Shujail Rahman, CEO at Garwari Technical Fibers. Thank you so much, sir, for joining us. First up, give us a sense of how exactly Q3 panned out. We do understand that there are a few headwinds that you faced, but despite that, you've managed to sustain the 20% growth rate. Outlook as far as Q4 is concerned, and what is the kind of guidance that you're giving as far as FY26 is concerned?
Thank you. Good afternoon, and thank you for having us on the show. Yeah, Q3 was very good. 21% growth in top line is very encouraging. Two segments did very well for us. One is geosynthetic, which is a primarily domestic business in infrastructure construction, which has done very well, and aquaculture, which is the global aquaculture, where we are part leaders. These two segments have given very good volume growth and also margin increased for us in terms of overall margin profile. As you mentioned, it's been around 18.5% or so. The outlook is positive. The Q4 outlook is very positive. We are at the end of February, almost at the end of February. Things are looking good. Normally, Q4 is a good quarter for us, so we hope to have a very good Q4, and hopefully we'll have a good year. So far, the year has been good. 17% growth in 9 months in terms of top line, and 60% growth in bottom line. These are encouraging numbers.
So you think you will do better than that? Because the third quarter you've grown 21% on the revenue, margins at around 18.5%. For the first 9 months, your margins are closer to 20% mark. By the end of FY25, do you see the margins cross 20% and your revenues cross 1,500 crores? Is that a possibility?
See, if you look at 9-month margin, we are at 19.9%. So we'll be, Q3 was, I think less on margin, a little drop in margin. So we'll maintain the overall 19.9% range that we had for first 9 months. Q4 normally is a better quarter for us. Aquaculture business is very good in Q4. So overall, we'll maintain the growth that we are having in first 9 months. Margin may be slightly improving.
All right. Speaking about aquaculture itself, and you were last time we spoke very bullish on the geosynthetics business, geosynthetics part of your business itself. How much does it account for in your overall business right now? Because you had said that it's seen a 40% increase in profits earlier. Where do you see this number going in terms of contribution to your revenue?
So this business was about 10% for us, let's say 3 years back, because of the 40% or more than 40% CAGR growth that has exhibited. We are now geosynthetic about 15% for us now. So as a percentage, it's increased from 10 to 15% last 3 years. This year also it's done well. The segment of slope protection, which is in the area of railways and in road construction, has done very well. So has this segment of hazardous waste management, which is mostly in the private sector.
Understood that. You majorly cater to the international markets, especially to Europe. Any headwinds you're facing over there? And also give us a sense of the current order book position. What kind of order inflows are you expecting as far as FY26 is concerned?
In terms of demand, there are no headwinds. The segment that we are in, the volume growth is about 4%. Fish production increase is close to 4% if you look at last 4 years, 5 years data, the salmon production increase. So if there's a 4% increase in production, obviously it amounts to much higher increase for us in terms of volume and in terms of tonnage that we sell. There are certain headwinds. Supply chain is definitely a big challenge for us. What is happening due to Suez Canal closure, we have to take almost 8,000 kilometer extra route, which is obviously adding almost 40 days to our transit time for most places in South America and America. So that is a little bit of a problem. But what we are doing is we are managing the relationship with the customers. We are planning to ensure our production is optimized. So we are trying to manage that. But I think overall, if you look at the numbers, we have done well despite the headwinds.
Right. On the domestic versus export mix itself, you had earlier said that you are looking at increasing your focus towards the domestic market. The rupee has weakened. So even as there are export headwinds coming in, international headwinds coming in, a weaker rupee should be better for your margin. So in that regard, how do you view your export versus domestic mix going forward? Will it stay at 60-40, or do you see more contribution coming in from domestic?
So if you look at for the 9 months, we are 60% export and 40% domestic. And because export has also done well. So we will have this kind of 60-40 ratio, but over a period of next 2-3 years, probably would like to improve domestic to about, let's say, 45% and export to 55%. Apart from geosynthetic, the industrial segment in India is also doing well, which is in the construction safety and those kind of segments, where we are doing well. So over a period of 2-3 years, hopefully we'll be able to have 55-45 kind of ratio. That's the intent.
And what are the margin differentials between domestic and exports? Because if you are making more margins in exports, then it makes sense to stay there itself, right?
No, the margin is pretty much the same. It depends on which segment we are growing in export. If aquaculture is the highest margin segment for us, if we grow at a much faster pace in aquaculture, the margin improves. But overall, domestic margins are also very good. The segment that we operate in domestic, we are also having a lot of innovation in pipeline, new products in pipeline, which will help us in domestic business. And all the innovation that we have typically are at better margins.
Mr. Rahman, another question. At the end of Q2, you had actually given an all-time high volume guidance for FY25 of close to 520,000 gross weight ton. Do you stick to that guidance? And what is it that you will be able to grow on that base in FY26?
Normally, we don't give volume guidance. Normally, we give profit guidance, and that will also normally in the 15% range. So we are not focused on volume; we are focused on profit. So what we are planning to do is maintain this 15 to 20% growth in bottom line. That's our intent. That's the guidance that we can give. But the focus is never on volume, because if you look at 80% of our products are value-added products, and 20% is the commodity which we are also trying to upgrade. So the focus is on profit and value-added products and innovation.
All right, and 50-60 crore capex that was expected in the sports segment, how much is that likely to yield in terms of revenues and margins, and by when?
This 50 crore capex is not in export. It is overall. We have two plants in India.
Sport business.
Sports business has been doing well. It's still about 15% of our overall company. The position is good. Order book is good. We had some headwinds due to supply chain issues and also some stock correction at distributor points in the USA. Now the order book is very good, and this quarter 4 will be good for sports, and outlook for next year also.
Thank you so much, Mr. Rahman, for joining us, giving us a sense of how Q3 panned out and what is the expectation as far as FY26 is concerned. Let's now slip into a short break. Up next, we will get an exclusive conversation with the top management of MobiKwik. Stay tuned.
Mid-cap index is doing extremely well. Let's talk about one of the debutants in the recent debutants, MobiKwik, which saw a stellar listing, has corrected nearly 50% this year. So how has life been for them post-listing? How does the company plan to grow ahead? Discuss all that and more as Shireen Bhan caught up with the company's co-founder, ED and CFO, the entire top brass, so to say. Upasana Taku, who's the founder and the head of the company, MD and CEO Bipin Preet Singh. Let's listen into excerpts of that exclusive conversation as we take your leave on Midcap Radar.
I want to start by talking to you about 18th of December 2024, because that really has been in many ways that milestone moment that you've both been working towards and waiting for. And I want to link this to your comments that was made on one of our programs, Upasana, where there was a sense of frustration, a sense of anxiety, but also a sense of excitement कि भाई ये IPO हो क्यों नहीं रहा है, right? That was a comment that you made saying everybody is getting cleared but not us.
Right. So I think what they say, that things that you work really, really hard for, finally when you achieve them, I think the sweetness of that victory is amazing. And I think that kudos to all the tech entrepreneurs in India who have gone public recently, also in 2024. But I would say that the journey for us was, I think, far more tumultuous, far more arduous for various reasons. I think some people have also said that whatever can go wrong has gone wrong from a climate and environment perspective. So I think it was a not so great year for fintechs to go listed in India. And I think many things happened during the year, also ups and downs with the market. So it was therefore a harder sort of journey for us. And people are talking about it because 1 year we filed our DRHP in January and we completed the IPO in December. But I would not tell you that we were working on the IPO for 21.
Yeah, I know.
We had also attempted launch in 21.
Absolutely.
And we had some bad luck, even though everything that we had done was perfect with Solution.
How's life changed for you? And I'll ask you this in the context of the fact that you had a great listing. from the peak that you touched in December of over 600 rupees, it's down 50%, but the markets have also corrected quite significantly. Does that now put pressure on you? You've had a difficult quarter, with the losses widening quite significantly. Has that changed the way that you think about the business?
Not really. If you see, one of the first things I did when I knew for certain that we are getting listed is I talked to one of the very well-respected entrepreneurs based in Silicon Valley. He's also an Indian founder. And I asked him, how has your psychology changed since your company got listed? And one thing he advised me, and he said, one thing you follow every day, don't look at the stock price. And so what he meant is, and what I understood is, see, these markets and even I would say BFSI sector, macros, what's happening in US, these are beyond our control. So I cannot control all of it. What I can only control and we can control is our business. And that business has scaled to a level where we achieved certain numbers. Last year, we became profitable. And by the way, we did it since 21 was the last fundraise. We did it without raising any additional funds. And we got to almost 890 crores of revenue and some 30-40 crores of EBITDA. So we know we can do it. We know how to build a scaled and profitable fintech company. So full stop. We know how to do it. And we have done it. But does it mean that the macros will always be the same? Does it mean that things will not change or you will not have 1 or 2 quarters up and down? The answer is no. And I think we are very, very bullish on MobiKwik, on what we can build and what we are building today. Because just I was discussing before our conversation, is that the opportunity of digitization in finance, what have we done and achieved in India? It is nothing. It is not even single-digit percentage. Whether you talk about UPI, whether you talk about wallets, whether you talk about stock market investing, whether you talk about digital lending, it's all in single-digit percentage penetration. Whether you talk about insurance. So all we have to do is keep building it, but keep building it the way we have done in the past, which is keep costs under control, be efficient, and now, like we were discussing, now with AI in the mix, you can be super efficient in terms of how you build your business. So I think the platform and the foundation is there. I see the IPO. Many people think IPO is like the culmination of something.
No, it's this actually could potentially be the start of a whole new chapter.
We didn't sell a single share in the IPO. Neither did any one of our shareholders. That tells you about what they think about the future of MobiKwik. I will not comment on things like what the valuation is or what the valuation was or what the stock price is today. But these are the people who have seen us perform over so many years, overcome challenges and demonstrate resilience to getting us here. So now, we have 500 crore plus that we've raised in the IPO, which is in the bank, which we didn't have. So I would like to think the future is bright and we keep building.
I want to really address this issue and get both of you to talk about this because people don't understand what it actually takes to not just build a business, but to cross the kind of milestones that you've been able to cross, to go through the kind of challenges that you've been able to go through in a regulated sector, in a sector where you are not just dealing with the government, but you're dealing with the Reserve Bank of India. And anything that the regulator can do can, in fact, cause an existential issue for people like you. And I don't think people realize that. And, I had an interesting conversation with the Kamath brothers at Zerodha, and they were talking about the same thing. They said, with one stroke of a pen, the regulator can shut you down, essentially. How has that been for the two of you to kind of deal with?
Oh, it's been crazy. And I had mentioned this to some of the people, relevant people here when I was attending a meet related to fintech industry growth prospects in Delhi a few weeks back, is that, when you're sitting here in Delhi or Bombay and we are passing regulations and or taking action, we think positive and negative, we don't realize that the people who look at companies like us, whether it is private or public, how they think about these decisions and what they understand and comprehend, because it becomes like a pretty big black box where the clear conclusion for a lot of people is maybe the regulators and the government don't want fintech.
Which they've clarified, to try and send out the message that no, that's not the case, that we do want to support and encourage.
The actions that take place actually point to the contrary, right, for many of them. And then it's hard to justify that actions are against certain entities only, and it's not against a particular sector.